much hope will oil bulls be taking away from the latest data, considering, I mean, you know, just this month alone, over the last 4 weeks, we've seen a drop of 13–14% in crude?
Yeah, Matt, well, I guess every little bit helps at this point. And we have seen the Brent price, for instance, up about 17 cents per barrel this morning, now at $48.90 a barrel. Now, the interesting thing is the thing that's been driving it upwards, it hasn't been anything on OPEC. An extension of the production cut agreement is pretty much expected by the market at this point. We've seen verbal intervention from Saudi Arabia, from Russia in recent days, and that didn't actually have that big an effect on the oil price. Instead, energy is ticking up today because we had the release of some data on U.S. stockpiles, in particular the API data that comes out every week. That showed that U.S. inventories dropped by 5.79 barrels last week. We'll also have the EIA data coming out later today, and that's forecast to show U.S. inventories dropping by about 2 million barrels. But it really speaks to the catch-22 that's going on in energy markets right now, and that's the idea that as OPEC manages to push up the price of oil, we do see U.S. production coming back on stream.
Yeah, I have actually, I see your chart there of Brent, which is, of course, the global benchmark. I look, because I'm an American, typically at the NYMEX trade CL1 commodity is how I access it. If you look over the last year, it's been obviously in a band, but here's a 4-week chart, and you can see we're down from basically $54 a barrel to $46. Pretty steep drop. What are we seeing in terms of trader or analyst reaction?
Sure. So I would say the vast majority of analysts right now are holding on to their oil forecasts for this year, although we have seen one or two cutting back. Notably, we had DNB cutting its 2017 forecast to $60 a barrel from $65 earlier. But what's really interesting in terms of the commentary right now, you're seeing a bunch of analysts come in and suggest what OPEC needs to do, and in particular, what form the production cuts need to take. So for instance, over at Petromatrix, we have Olivier Jacob saying that OPEC should look to do short, sharp cuts, that it shouldn't focus on these long-term production declines, which may or may not have an outsized impact on the market, given that when you're doing those sorts of long-term declines, you have to focus on longer-term forecasts for the economy, for refinery utilization, for all sorts of things, and those have a much higher margin of error. So they're suggesting that OPEC kind of comes in and does these quick cuts and shocks the market. Whether or not OPEC listens, well, we're going to have to wait to find out.